That is probably the ultimate test, is that we need to sleep in peace at night, saying we're being honest and we're doing absolutely everything that is out there to make sure that this is the real deal.
Welcome everyone to our Hero Capital Show. I'm your host, Tim Mai, and today I have not one, but two amazing ladies on the line with us, capital raisers, multifamily investors, operators, and soon-to-be fund managers as well. I'm super excited to have Paula and Adriana on the line with us. We're going to do things a little bit differently today because they have a long background in real estate, but we've been looking at deals together. And I just love the way that they're doing their research, their due diligence on both the deal sponsors as well as the deal itself. And so rather than we'll talk some about capital raising like we normally do, but I especially want to focus this call on due diligence and vetting because they do an amazing job with that. And so with that, Paula and Adriana, which one of you want to go first to give us a little bit of background on you, how you got into this whole world of real estate investing and where you're at now?
Okay, I will start. I am married to an amazing man for 37 years, and he's a pilot. So we kept on purchasing property, live in the property, then move to the next destination or next place where his assignment was. And then all of a sudden find ourselves with a profile of residential homes in different states of the United States. We had Florida, Alaska, a little bit of different states. So finally, after moving around the world, literally, we lived in Asia, we lived in Alaska, we landed in Austin. We were looking for the sunshine and we find it. After being in Alaska for too long, we found the sunshine. And we started going deeper into real estate. We started flipping. Then we realized that we could start developing. So we started developing condo regimes in downtown Austin. And that was just an amazing way and that's how I met my partner, Paula. We came together, we worked in some projects together. And then we realized that the next step forward was definitely commercial real estate. And we got involved into multifamily by most importantly, educating ourselves. So we joined a couple of groups just to understand what is an entitlement, what do we do, what are we supposed to do? And that's how it all started. And that's for me, that's how I end up in this amazing world of real estate. Paula.
Excellent, Adriana.
Thank you. Thank you, Tim, for inviting us. First of all, it's an honor to be with all of you. So thank you for having us. I was actually doing real estate at the end of 2012. We both started in Fortune Builders and we started learning how to flip homes. And then, of course, when Dan Merrill decided to graduate into commercial real estate, we followed him. So I was an LP partner in that venture and also several others. A lot of things happened in between then. We were building the condo regimes, but then COVID happened. And as you all know, when COVID happened, everything stopped and we all had to renegotiate everything. We sold the condos and we were in the black. So that's one of the great things. God, thank you, Lord, for letting that happen. And then we decided to work on trying to learn a little bit about brokerage. We realized that the biggest earners in the balance sheet were still the investors after much ado. And there were also some rules as brokers that we were not allowed to do. And I'm not good at that. I usually like to find my own way and forage. And so, of course, we did. And we picked up the pieces and we decided to build together. And we learned how to manage the permit office in Austin, which was not easy. And also then we started to invest. We started learning with Michael Blanc after that on syndication and how to underwrite. And so here we are today. So after certification with that, we are learning from all of you, really. And we're taking one step at a time. And we remembered our mentor, Philippe Schuligan. He was really good at helping us with due diligence. And we're honored to be here today. So thank you.
That's really, I love that. Yeah, it's cool to hear that you go back to Dan Merrill. Dan, Paul, and myself met each other in 2007. We were in a mastermind group together. So I get to watch them build the whole Fortune Builders from the very, very beginning. Yeah, it's really awesome. And yeah, they do some pretty amazing assets these days with their Class A national tenant retail strip centers and stuff like that. It's pretty cool to see their growth. All right, let's start with, I know you both started as an LP into deals. Share with us a bit about your journey from LPs to GPs to now looking to do fund of funds, especially into how you look at deals, how you vet deals. What has changed since you started as an LP?
I'll start with that one. When you first start, you're just looking at the reports and trying to glean information because that's where you really learn. You look at what failed and what actually succeeded, and you try to put the pieces together as you take more courses and continue your learning. But I realized then nobody would have been able to fathom what happened in March of 2022 with the Fed and how they increased interest rates like 13 times in 13 months. That was unprecedented. And when I saw that, I knew that there was a giant wealth transfer occurring and that we were about to lose a lot of money. And there was really nothing we could do to stop it. Then it was a job of looking at the partners and how they managed it. And then you could actually tell after listening to Robert Kiyosaki that when someone's swimming naked and they didn't do enough capital raising, I think we all witnessed that. And it concerned me, upset me, because I knew that these are great entrepreneurs. It's what this whole country's founded on. And look what's happening to them. And a lot of it's not their fault. They had to learn themselves how to pivot in their deals in order to save their deals. Now, since then, we've all gotten a lot smarter. They've consolidated properties into funds. They've gone to banks and pulled out funds and money. And they've learned how to manage it. And to their credit, I salute them all. But it's one of those things where we don't really see it coming until it's already here. In 2008, I lost $43,000 overnight, and I just wept. And I thought, how in the world can I beat the odds? There's no way I could have seen it happening. And it's going to happen again. So we all need to think about that and do what we can to protect each other and our own wealth legacy. So today, we look for ways that GPs can pivot and how to support them and where you're spending good money after bad on a call and when you're able to best put money into a different deal or go a different direction for a different asset class.
Yeah, and to add to that, I think one of the things that I learned the most in the past couple of years, and I think it's a great example to all of us, is how these operators have responded to many capital calls. And we have heard all from A to C, correct? But I think that the real good operators, the ones that are really a shining star today, are because everyone, for the most part, have lost money at one point or another in the last couple of years, either as an LP or a GP or both. However, I think is the way they were able to manage it and to be able to communicate. I think communication is so important nowadays. And I've heard horror stories about operators that unfortunately they know what's going on. They know that the train wreck is coming or is already upon them, but have not been able to communicate. And the best operators, whether losing money or not, have been able to communicate at the highest level. And that to me really, and I know some of these operators, my hat down to them because they are communicating. They are being raw. They're saying, this is what's going on, this is what's happening, and this is what we're doing, and not trying to hide by not answering, but not communicating, which I think is for some people, if you put $100,000, obviously it's your hard-earned money, regardless how much money you make or how much money you have in you or your network. It doesn't matter. It's still their money. So I really, my highest respect for those that are out there that are really making the extra effort to communicate and to stay in continuous communication and being raw and say, this is what's going on. So to me, I think one of the greatest lesson to all is that kind of communication that we should, as GPs, it is a must that we need to communicate at the highest level. And if you ever communicate once a month, now it's probably once a week on the weekly basis, what's going on. And I hear stories also of people that as GP, they have not in the best place and they're losing money. They lost money to some of these investors. And because of the highest level of communication, even though they lost money in the past, come in those investors and invest with them again, even though they lost money because of this communication level. So to me, that was just, it has been such an eye-opener.
All right. I don't know what happened there, but yeah, no, I totally agree. Yeah, having over communicate is always much better than under communicate any time of the day. Even when deals are not going wrong, it's better to communicate more than others. And yeah, like I'm in a deal right now where things are not wrong. The deal's moving along just fine, but the operator at best communicate once a quarter at best. I'm like, it's take forever to get updates. And the investors, the LPs, they're very concerned when they don't hear from you for that long.
Right.
And yeah, I totally agree with you there. All right, let's go through your process, especially now that you are looking to take on being a fund manager and doing fund of funds. What does your due diligence process look like? So when a deal operator, a deal sponsor come to you and say, hey, Paula, hey, Adriana, love to have you come on this deal. What is your process? What are the steps that you take?
We do have a long list that we follow. It is a long list. And then I'm going to start with some and then Paula can follow. But yesterday we're having a great conversation with a pilot. He is interested in investing with us and he's asking the same question. And the first and foremost important for me and for Paula is crime. That's the number one, like in the top of the list, number one. So we have to make sure that that goes well. So there's many sources that we use. And if that passes the check mark, then we move forward to the rest. But the number one thing is crime. Make sure that there was one property that we were looking at not too long ago. And when we look at the crime was really high. It looked red. Red is the worst. Some of the websites that we look at, they go by color from green to red, correct? And then there were some comments, no, it's not really, the crime is not really high. I said, how come it's showing red? So let's go. Come on, let's go on a drive. Best thing is to go on a field trip. So we go on a field trip. Obviously, we stop by Buc-ee's and we get whatever it is that you hit at Buc-ee's, right? That's a must. And then we arrive to the destination. And then we figure that the reason why it was red is because it was an industrial area. Everything about the building, all around it was industrial. So whether the crime might not be high, but because if industrial is already maybe considered high. The building was a great building, actually a newer building, very beautiful building, but the surrounding areas, unfortunately, was just not the best. So that's for us is the number one. And from there on, it is a long list, a lot of data. We do use a lot of data. We look at population, we look at job growth, demographics. It just, the list goes on and on, but we go into the nitty gritty. We really go down to absolutely anything in data that we can consume around that property, around the city, around the neighborhood. Is it a submarket? Is it a main market? And I'm sure Paula would like to add some to that.
Yeah, I will tell you that on a personal note, I lost a property last year. It was in Memphis. And you hear the stories right now of the president going into Memphis and everyone's, oh, up in arms. And I'm like, hey, I wish you would have gone a year ago because I had a little small single family rental and it was in an IRA, so it was managed. And I just couldn't get the police to go over there and do their job. And I fought it for about 6 months, spent a lot of money. And finally I said, I'm spending more money than I spent on the property. So I gave up. I said, okay, let's fire sale it, get it out of the portfolio so we can spend the money and the time. It's really the time on something much more lucrative. And so I did that. And I'm not sorry now that I did it. But at the time, the daily grind of trying to put cameras there, keep the compressors from being stolen, the coppers being stolen, windows being broken, it was just an all-out effort to destroy my property. And I just couldn't get the support that I needed. And I couldn't go to Memphis all the time and depend on the people that I have. Changed partners many times, managers, et cetera. It just didn't happen. So I gave up and I said, okay, I win because this way I can spend my time on something much more lucrative. But that's just one example of the issue with crime. To me, it's not just the crime. If you can manage the crime in some way or mitigate the crime, buffer zones, police officers, et cetera, that's great. You may spend a lot of money that you don't really have, and it's not your money, it's your investors' money. But in the end, if you don't have the support of the local police, it's something that's not going to happen. And so we all need to look at that. What's going on in the city council? Are they funding their police? I know in Austin, they went for 4 or 5 years without funding the police, and we went through craziness because of it. So luckily for us now, the police are funded, and so we can guarantee more safety here. And that's one of the reasons why I moved right outside the city. So anyway, that's not the only thing that we look at. We look at job growth. We do extensive research on partners and businesses coming to the city. We make contact with the city and the business development directors. There's a lot of things we research for the city council and P&Z zoning to see how they work well together. I think that's really important and what they need as far as absorption is concerned. And also some of the hidden jobs that may be coming with regard to the military, things like that. Those can really drive your property's value if it has really good dirt. In some of the areas where we checked out, if you have an area where it's industrial or blue collar, at least for the time being in certain places, then that may define your highest rent level. Whereas if you're in a property that's surrounded by properties, single family residential, where the average median income is much higher, then it gives you much more options. We're looking at other property right now where the median property is upwards of 450,000 per unit. They need multifamily units, and the city council is clamoring for that. That's their idea of diversity, is having different housing. That's beneficial to us.
Yeah, and I think adding to that a little bit too is working hand in hand very close with the city is important to know what the plans are. This is public information, so it's important to know who's coming to town, who's moving in, what businesses are moving in, just because it gives you an idea of what's going on, who's coming, and based on that also plan ahead. So it's important to work with the city and do a lot of research. It's incredible the amount of information that you can actually grab from each city, each municipality. So I think it's also important to do as much as we can, try to work and find out what's going on with the city. There's great information out there. You just have to dig it though, for sure.
Yeah, but sometimes you have to pick up the phone too and
Yep.
just talk to people. Get the
Correct.
data.
Yeah. So with you going, that deep into the area, do you try to focus on just a few areas that you would partner with operators on and get involved in those deals? You're open to many areas, and then whichever deals that you do go on, that you just go deeper into all that research with the city and everything?
Right now, most of the deals that we're looking at are in Texas. As we know, we always be looking to the healthiest market that at least it has been for the last 5 years. Dallas, San Antonio, Houston, Austin is not even in the map anymore, not for now. But anyways, so it's mostly Texas for now. And yes, once we know what markets we like, and right now we're looking more into sub-markets if possible. We've seen that after the last couple of years, sub-markets have been working better than main markets. And once we found a property or a property that is available, then we go into the search. So we're in Texas, and then deals are coming in literally every week. There's someone that is saying we need money. So we look at every single deal, but starting with the crime, and then once that passes the inspection, then we move on with the loan list.
I know we had a great conversation yesterday around vetting the deal sponsors and background search and research and things like that. Some fund managers approach it from doing their vetting on the deal sponsor first before they even look at the deal. Do you do something similar, or do you look at the deal first, and then if the deal passed, then you go do deeper research on the sponsors? What is your order?
I would say that we're so connected with other investors, with other rooms of investment. And we're also in a different mastermind with Mauricio Raul, Platinum Learning. And so we stick pretty much to the things that are in public. They're already in the public, and he's very quick to talk about them, about what to watch out for with sponsors. I would love to look at a deal first, and if it gets even close to that, we give everyone the benefit of the doubt until there's something that happens that is a red flag. So it's usually not us that reveals it. They pretty much reveal it themselves, and they just don't know it. And so what I would say to all the sponsors is, when you put your information out, be very coordinated and make sure you dot your I's and cross your T's before you present or speak, because it's very important that the message is consistent. And if you have one red flag, that's okay. If you have 2 red flags, that's okay, maybe. And if you have 3 red flags, okay, we really need to look at this. Is this something that's real and true? And then we start digging. And it doesn't take long. We are connected with other investors from all over the country, and they talk. And some of them talk more than I would be very careful because of reputation. I wouldn't want someone to say that about me. But
Sure.
at the same time, if you've had somebody that's had 4 or 5 calls, then you have to think about that. We've seen a lot of iffy things happen in the last 3 or 4 years, and then we've seen some downright fraud. And Tim, you've seen it as well. So we all have to be careful. Remember that it's not our money, it's somebody else's money. So transparency is important, honesty is important, and I always like to pay myself last. If I can say that I do that, then that's the deal I want to be at. If I send a deal like this, something that looks out of the ordinary to me, to Mauricio, and he goes, that's going to be flagged by Paul Atkins of the SEC. I rely on him because he's always been so honest with me before. And he's, I will keep you out of jail. And I appreciate that.
Absolutely. Yes. I think that, yeah, we usually look at the data. We go really deep into the data, really deep into, we walk the property, physically walk the property. And then once all that has happened, we go into the underwriting. Once we do the underwriting, we usually use another set of eyes. So we always hire a third set of eyes, another company that will do the underwriting with us and for us. So we do it ourselves and then we write, and then we always hire somebody else. And then once everything has passed on that, then we go ask the operators, we do background checks. And it's funny how people react to this. It's hilarious how people react. Are you doing a background on me? Yeah, you could be worth $2 billion and I still want to do I don't know anything about you. I've never been with you. I don't know who you are. So yes, I want to do a background on you and please be my guest. Do a background on myself as well. But people, the reactions of people when you ask that is really funny. But I think that's it. We all have a past and I don't know what happened and what had happened in between. But I think it's important to have that as well and to know who are we dealing with. And I always said to everyone else, as I was talking to this pilot yesterday, I say, if this investment is good for my mom, then it's good for my investors. My mother invests money with us. My brother invests with us. My son invests with us. Because if it's good enough for my family, and especially my mother, she doesn't have a husband anymore. He passed away. If it's good enough for her, it's good enough for my investors. And he has to pass that test. And if he doesn't pass that test, I'm sorry, but we're moving next. So that's the reason why we really, Paula and I, have to feel that I go to sleep at night in peace, knowing that I've done everything that it has taken to be able to know that this investor's money is the safest it can be. And that is probably the ultimate test, is that we need to sleep in peace at night, saying, we're being honest and we're doing absolutely everything that is out there to make sure that this is the real deal. So if it's good enough for my mom, it's good enough for everybody else.
I will say that on my own, I've had to talk about my father that passed away and all the crazy things he did. And I'm not my father. I'm trying to clean up my father's mess. I'll be the first to admit something that happened.
Let's give a little bit of background on that and why Paula is sharing about her father here, because I had a conversation with Paula and Adriana yesterday. And one of the deals that they're looking at right now, where the son is the operator and the father is not in the business, but his background, negative background stuff came up in the background checks. And so we had a conversation about, is that a consideration when it's a family member that had bad background, and how far do we push that line of, like how much of that do we put into consideration, if any at all? So that's why Paula is mentioning that.
And to that, so that everyone can understand, is the father has the same name as the son. So he's Junior, Mr. Junior. And because of that, when pull out the information, both names are there, but we don't know who is who, correct? So it's trying to figure it out, is this the father, is this the son? However, if you go back in time and years and you subtract, then probably the son was a little too young to be able to doing that, maybe 17, so maybe it was not the son. So anyways, it's how to figure, even that you become a detective. How do you figure those things out, and how do you say, okay, yeah, like, as Paula said, we have made mistakes in the past and her father's mistakes are not Paula's mistakes. So for sure, yeah.
I would
Some
give him
saving
a
grace.
second chance myself. I would, because again, my father's crazy, but I was reared by my mom. So anyway, that's just something for y'all to think about.
Yeah. I want to do a follow-up question around when you ask the deal sponsors about doing a background check on them. So you've actually gotten pushbacks from some of them?
Yeah, the answer is like, me? Like, really? Me? I was like, yeah, you. That's the answer. Me? Yes. Some people are very surprised. Really, they're very surprised that we're doing that. Very surprised.
I'm surprised that they're surprised.
Yeah. And some of them, we've been with other people, other investors that said they've gotten to the closing table and they found out that one of the sponsors on the loan had a bankruptcy and didn't tell anyone. So they had to scrap the deal. So we don't want that to happen to us or our investors. Yeah. So we just want to make sure that we all are honest before we get there.
Yeah.
I'll start the process. I'll do it on me.
Yeah. In a partnership, I can totally see that. I even know of a deal where, at the closing or near closing, the bank found out that one of the partners had a criminal case that they're like, oh, this wasn't disclosed to us, so the bank backs out of the deal. So yeah, these kind of things definitely do happen. But as a fund manager, especially doing fund of funds, a lot of fund managers don't go to the extent in which you're going with the background check. I think that different people have different levels of due diligence that they do, right? From, vetting the deals. Like, I love how you don't just underwrite the deals, you actually go and walk the property. And like you mentioned, if it gets far enough, you would even pay for a third party underwriting company to underwrite the deal. So you're looking quite a bit of investment in time, investment in money before saying yes to the deal. So when you have that amount of money and time invested, like how many deals are you looking at to consider to raise for them?
It's funny because we looked at many every week, but again, the number one is crime. And that one alone gets rid of probably, I will say 70% of everything else that we looked at. Is incredible. How
It's very
many?
sad to say. That's very,
Yeah, very sad. And because we look at
very
different
sad.
platforms, like at least three different platforms, and they all coincide saying high crime or considered not only high crime enough that I don't want to be in that area. Yeah, that's the first one, this first disqualification. And you will be surprised how many deals, but just doing that, just go out the door.
But there's another consideration today, I think, as well, in looking at deals. That's also a very high rate limiting factor. It's hard to increase rents. Okay, so you have to look at other income or another play. I say play, either a tax play, insurance play. You have to have another angle, if you will, in order to make deals work today. So it's not just about that, or you have to be looking at specific areas of job growth that you know of, and that's partnership with the city, partnership maybe with an NGO, something that's an angle for you. If not, then you need to be prepared for your exit strategy in another way if that first deal falls through. So there's a little bit of strategic thought that has to go into deals today. And anyone that has successful deals knows what I'm talking about.
Yeah, for sure. Anything else you'd like to share with us around this whole due diligence process, vetting process, before we switch over to talking about some capital raising?
I will say don't be shy to ask this. Maybe we're not the people that have 250 million under management, and that's okay. You don't need to be the big one in the room, but don't be afraid to ask these big boys or big whoever that you want that background check. A lot of the times we think that because they're doing so well and because they have probably not only millions but billions under management, then they're okay. And not necessarily. So it's okay to ask those questions, and it's okay. And it's at the end of the day, again, if it's good enough for my mom, I will do anything. So don't be afraid to ask. It's okay. And even if you get pushed by or rejection, okay, if there's rejection, there's something there. There's got to be something there, because if you have nothing to hide, go ahead. Look at me. I have nothing to hide. So it's okay to ask whomever, big or small. It's okay.
I would say that we may not be the biggest deal players out there, and that's fine with me. I've got other assets coming and diversity of income. What I would say is that if you call someone and you're asking about a deal, if you're one of the sponsors or the owners of the deal and you don't know your numbers, or you're not speaking clearly or completely about the deal, then don't answer the question. Wait till you get in front of the deal and then talk about your deal. Because if you just do nothing but churn and burn and you don't know your numbers, then it doesn't mean anything to talk to when we call and we're trying to find out about your raise. So we just need to be very clear about how we present and the way we communicate about the numbers in our deal. We need to know our numbers.
Very good. All right, let's talk about the deal sponsor's track record. At which point is there a hard no? If the deal sponsor had a foreclosure, if they had capital calls, if they have past distribution, how lenient are you on the situation?
Well, I'm going to go first and I'll let Paula second. But one thing that you should know is that because we move around in many circles around this real estate investor world, we hear a lot of things, and good and bad, correct? And again, we're humans. Therefore, we're going to make mistakes regardless. Some of them are going to cause that is going to follow you for the rest of your life, and it's going to be really bad. Some of them, if you pick up your stuff and you clean it up and you become a better person and do great things, then hey, there's grace for everyone. But that's another thing, that because we hear a lot of things, then we are going to find out sooner or later, and we ask a lot of questions. a lot of questions. It's funny because a relative of mine gets a little annoying with me because I am a child at heart. I ask so many questions. It's annoying, but it's the reason why we go deeper and deeper. Really, is getting deeper. So we ask a lot of questions in these rooms, closed rooms. We ask a lot of questions, and questions that, some people are not afraid to say. I always ask, and I don't know if I want to get the answer, but I always ask. And if I get the answer again, and it might not be the truth, everyone can twist the truth, but if you hear it over and over and again, then they say that if you hear it long enough and many enough, then something is hiding or something is happening. So it's being in circles, talking to a lot of people. And yes, we make some mistakes. And like we said, if it was the mistake of the father and not the son, then obviously it will not be fair to just put it all on one person, on Junior today, and say, no, we're not going to do business with you because. So there is, obviously, we have to go dig deeper. What happened? How did you behave? How was this transaction? And just go a little further with that. And again, a lot of people being in different rooms allow us to find out more and more about what other people do. And that's the reason why we have a lot of information always coming in and out. Paula?
Yes. Thank you, Adriana. I think that's right. Ask questions. If you're a GP sponsor and you've had a call, admit it up front. If you're an investor, who hasn't had those calls in the last, I don't know, four or five calls last year that I had? I stopped counting. But it's a matter also of, how did the entrepreneur handle the call? Did they disclose it? Did they bring it up and say, that was then, this is now, this is what we've learned. We want to move forward. We think we can make you money. Let's move forward. It's not for everyone, but it might be for you. There's grace in that. And I believe that. And it's part of what makes this country great. We get knocked down, but we get right back up and we come out swinging. And that's to be celebrated. That's what makes us Americans. I think it's wonderful.
That's awesome. Thanks, Paula. All right, switch gear a little bit. Share with us about your capital raising. Who do you raise money from and why?
I raise money from pilots because I'm married to a pilot. So that is my world. As a matter of fact, I was in a conference last week in Orlando, and I was the only business that had to do with real estate. And it's interesting. A lot of people asking a lot of questions. These pilots, they don't know anything for the most part. What is a syndication? So there's a lot of education that goes with it as well. So my husband was there with me. Obviously, my son was there for me as well. And it's unbelievable how much these people don't know, and they don't know what they don't know. And when I was talking about the ways that they can actually work with the system, the IRS rules, and all about amazing bonus depreciation, and what it came back with 100% depreciation, their eyes, I love the eyes. They just, boop, they just open. Oh, that means that I'm saving money in taxes. Everybody gets excited when I say you can save money in taxes. It's like, how? Immediately those eyes just light up. And I love that. I love the fact that we can educate. And I said, look, it's not just that you have to invest with me. At the end of the day, I love educating you because you're making your family and your community better. So it's amazing. So yeah, my world is all about pilots.
That's awesome. I'm curious, how many people were there at that conference?
Oof, my gosh.
This is for Latinos.
Just rough.
It's called Latin Associations in Aerospace, but there's people from all over the world, literally.
I see.
There was thousands,
there,
probably a couple
I
thousand.
See. Oh, wow. Okay. Was there any deal sponsors or that were sponsoring the event? No?
Oh, yeah, many are sponsors, but the only one that it was in real estate was me. Everyone, there was a little bit of everything, but the only one in real estate was me. Yeah. So it was.
That's good. That's awesome.
It was amazing. It was amazing. Yeah.
That's good. Yeah, I have a background in healthcare, and so I solicit for doctors and pharmacists, but a lot. And this week, I'm actually going out of town to Newport Beach to PIMDcon.com for the doctors and entrepreneurs. And they have two tracks.
Okay, yeah.
And the one track is the entrepreneurship within their practice, and the other one is just trying to invest in other deals such as real estate. The doctors think they have time, but if anyone saw the news press yesterday, they don't have time. I would say about 2 to 3 years, maybe. And AI is going to take over a lot of their algorithms and protocols. I see it today. It's a mission to help educate them and to give them a way out and build wealth legacy. So I'm excited about that.
That's excellent. I love that you guys or you gals dividing and conquering that way, right? One go after pilots, the other go after the doctors, the physicians. That's awesome. All right. So before we open up for Q&A from the audience here, if for those that want to reach out to you, connect with you, perhaps partner with you on deals or invest with you, where would you like to send them? What's the best place?
You can go to our website, earlineequity.com. You can send us an email at info@earlineequity.com, or I can give you my cell phone number.
I'll put it in the chat.
Yeah, put in the chat.
They'll put in the chat,
Everyone have that.
correct.
We'll put that in the show note here for the podcast section as well.